Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 918th edition of Short-Term Trading Live with Oscar Carboni. Traders, these videos are geared for short-term trading, meaning the video that you are watching is most likely just good for trading Monday night through Tuesday into Tuesday's close. If for some reason this video stays valid through Wednesday, I will make an announcement and resubmit the video. For now, this video is good for trading on Tuesday. That would be September 18th, 2012. All right, traders, as we know, futures trading can be extremely risky and can cause substantial financial loss. If you do not have risk capital to lose, and if you do not recognize that a stop is your best friend, then you should not be in trading futures. You shouldn't be involved in this game at all. For you traders that understand the game, let's go rock and roll the Dow Jones Transportation Average Daily Bar. Traders, you're looking at the Dow Jones Transportation Average Daily Bar chart. You've seen this chart in just about every video I've done for the last 10, 12 days. If you recall, when we started with this chart, none of these bars here existed. In fact, I'll just do a quick exercise with you to show you what I'm talking about. Okay, traders, this is exactly what this chart looked like when we presented it to you and said, this looks like a perfect setup for an announcement. And then the very next day, we had our announcement come out of Europe, and then the announcement came out of the US, and then out of China, and this week coming out of Japan. All of these countries doing stimulus packages. So I put this chart before you and said, live as it happened, this looks like a great spot for that exact thing to happen, an announcement and a false breakout of this huge pennant that's forming right here. Now I'm going to add the days back in what has happened since. The false breakout was real. It's exactly what happened. We got right back into our pennant and we got to the top of it, and look what happened as of today. Traders, this is very problematic for me. You got out of the pennant on this day, wonderful day, but look what happened today. On Monday, we came smashing back down and came all the way back down to the 200 bar moving average. I think that's a problem. I think we need a two-day pullback. So the first chart we look at here, the Dow Jones Transportation Average, shows us that, yes, the technique worked. We had the false breakout. We went straight to the top, but when it got to the top, it stopped moving and came back down. Here we are at the 200 bar moving average. I suspect that tomorrow they start off and try to push it down a little, and then we'll see what happens. I do think we could get a two-day pullback. I'd love to see it pull back right to this line, and then from here, just watch it take off. But we will play this one day and one bar at a time. But that is what I'm hoping to see. A couple of days like this, and then a nice rally right back out. Let's see what the Dow Jones Industrial Average has in store for us. Traders, the Dow Jones Industrial Average Daily Bar Chart. You've seen this chart many, many times. I've presented this chart to you, illustrating the head and shoulders and the failed head test up here. When we got up there at the failed head test, it never got itself above the top of the head and it failed. Came all the way back to here and then created this yellow parallel channel that we're in. Well, traders, this yellow parallel channel looks like we got just about to the top of it on Friday. Monday looking tired. I think a couple of day pullback might very well be in order here. 1, 2, and right back into the thick of things again. If we could get a two-day pullback, straight back up we go. Now, this market's been strong, and I don't know that we could even get a two-day pullback because it's a very bullish market. However, just about every indicator that we use today is turned and pointing lower. We must follow the indicator base. We must follow the formation itself. Another bearish-looking indicator right here. The indicators are bearish. The formation itself is getting tired. Remember that each time we hit the top of this channel, we end up coming back to the bottom, bottom, top. So you hit bottom, you hit top, went to bottom, hit top, went to bottom. Then we stayed at the bottom, just about hit the top, came back down, hit the bottom, rallied towards the top. Well, down to the bottom in a quick two-day fashion. Wouldn't surprise me if that's what came next. So looking at your Dow Jones Industrial Average, you would absolutely think that there's a bit of a pullback that we could expect for at least a day or two. Let's look at bonds, and I'll show you maybe why this is going on. Traders, 30-year T-bond chart. Remember, I put this chart before you on Sunday for the weekend webinar. I did it in the daily bar like this one. It said an enormous head and shoulders. This is a do or die area, a very important juncture. This could be the beginning of the bear market, but first you must breach 145. Does everybody remember that? We must get below 145 and hold before the bear market begins. Here's what I had in the video on Sunday for you to view, and here's what the weekly in that very same video looked like. Traders, the weekly bond chart, each one of these bars here represents 1 week's worth of trading. I mentioned to you in Sunday's video that we are at the do or die level. It either holds here or the collapse and the down market begins for bonds, but it must violate the 145 level before you could say the top is in. Well, we're holding the bottom of the flag, we're holding the bottom of this blue channel, and until that breaches, you cannot call the top in bonds. And if bonds start to head back up on Tuesday, it will put some pressure on the S&P market. So hold or collapse for 1 day so far. This weekly chart is holding, and it's beginning to put a little bit of pressure on our U.S. indice markets. So that's the story. Oh boy, what a difference 1 day can make, because Sunday the analysis was so bullish you didn't know what to do about it. And Monday you recognize when you look at the analysis, the likelihood of a pullback in S&P is probably going to come our way for Tuesday. Let's take a look now at one of the grain markets. Okay, traders, the corn market. If you recall, I showed you this market in the last few videos and said, boy, it looks to me like corn is topping out. When I put my topping tool on it, it is staying true to the topping tool. Look at how many times you bounced off of it and then just stayed within the rounded top. Once you got through it, but not by far, look at how nicely this rounded top is starting to work out. And now you're getting into a little bit of acceleration here. Look at a little bit of acceleration on the downside. So we think that the corn market very well could be topping out here, and we're expecting for Tuesday the corn market to drop a bit further, and we're going to look at the short side of corn. Traders, that is my class for this evening. I wanted to show you the indices, the Dow Jones Industrial Average, the Dow Jones Transportation Average, why the bonds are beginning to hold. We'll see what happens tomorrow, and why it looks like corn is topping out. I want to thank you so much for coming to today's class and or watching tonight's YouTube video. Remember to come on down to livewithoscar.com. Jump into my free trading rooms and allow me to help you understand the markets, understand the charts, and hopefully use these charts to help you make wiser decisions. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.